Are you going to be a beneficiary of a spouse thrift savings plan? Well, if so, this Tuesday tip is going to be for you, so stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center, and I want to welcome you once again to our Tuesday tips, where today we are going to be discussing individuals who may be receiving a thrift savings plan, or better known as a TSP account, from their spouse. Now, I can tell you that the Retirement Education Center this year is going to be working very, very heavily in the federal space, meaning that we are going to be providing information for federal employees to help them understand not only their thrift savings plans better, but all of their federal benefits, from their federal life insurance and health benefits as well. So this is going to be where you're going to want to tune into this year to understand your federal benefits if you are a federal employee. But I can tell you there are so many questions to be had if you're going to be inheriting a thrift savings plan from a spouse, or if you are a non-spouse and you're going to be inheriting these accounts. So we're going to talk about that in our Tuesday tip. So let's go ahead and jump into our lesson today. So what is a thrift savings plan? Now, I know this could be a very silly question if you're currently contributing to a thrift savings plan, but of course there could be some new employees that are going to be signing up for these types of accounts soon, and they're going to want to know a little bit more about how these operate, because most people have not heard of thrift savings plans. They've more or less heard of 401ks or maybe 403bs or 457bs. But TSP accounts hold billions of dollars of assets for retirees, so we definitely need to understand these accounts better as financial advisors. So a thrift savings plan, or a TSP account, is nothing more than a retirement plan for federal employees and uniformed service members. When it comes to TSP accounts, they offer the same type of savings and tax benefits as private corporations offer for employees who are currently contributing money to a 401k plan. Therefore, a TSP account is a defined contribution plan, and what that ultimately means is that the retirement income that you're going to receive from a thrift savings plan is going to depend on the account accumulation and how much money you've put in during your working years. So what exactly happens to your TSP account when you die? Well, here's what's going to happen if you are a spouse of the beneficiary. If you are a spouse of the beneficiary, you can literally just keep that TSP in your name. So you don't have to do anything with it. They can turn that TSP over to you if you are a spouse. It can stay there. And then when it's time to maybe take required minimum distributions at your required minimum distribution age, then you will start taking money out of that particular TSP account. But here's when things can get a little bit tricky if you are a non-spouse beneficiary. That means, you are not married to that particular participant. You are a non-spouse, so that means you are a kid, or maybe you are a grandchild of that participant. You're going to have to take the money out of that TSP account within 5 years. So within 5 years of the death of that participant, if you are a non-spouse, that money has to come out of that account. Now, this will include both the traditional TSP account and a Roth TSP account as well. So you can contribute to a traditional TSP and a Roth, and no matter which account it would be, all of those funds from any of those accounts must come out within 5 years. Obviously, if we're talking about money coming out of a traditional TSP account, this can create a huge tax problem for the beneficiary. That means that when that money comes out, both federal and or state taxes will have to be paid on those funds. So you can only imagine if you are receiving maybe a $1 million TSP account as a non-spouse beneficiary, having to take all of that money out of those accounts over 5 years can create a huge tax problem for you. Now, of course, no taxes would be due on a Roth TSP account. But here's the problem here. The Roth TSP account could no longer grow tax-free, because that money does have to come out within 5 years. So you lose that huge benefit of those dollars being able to sit into that account and continue to grow tax-free, because those funds have to come out. So what alternatives do you have when it comes to inheriting a TSP account? Well, here's one of the things that you can do. If you are a non-spouse beneficiary, you can simply roll over that TSP account into an inherited IRA or an inherited Roth IRA. Now, if you do that, due to new rules of the Secure Act that was implemented a few years ago, if you are a non-spouse and you have an inherited traditional IRA or an inherited Roth IRA, you would have to withdraw those funds out of that account within 10 years. So within 10 years, all of those monies would have to come out of that TSP account, not 5 years. Now, with that being said, obviously that's better, but you're still going to have a large tax burden when you're taking money out of a TSP account, even over 10 years. So what's the solution that we may offer our clients in this particular situation? Well, if you're really trying to avoid the taxation to your beneficiaries and you're the owner of that TSP account, if you are healthy, we would have you to consider applying for a permanent life insurance account to transfer the wealth to your beneficiaries. This is a key element and a key strategy in helping you to do some estate planning. One of the key elements when you're talking about permanent life insurance is that the death benefits can avoid both income and estate taxes. And one of the things that we would have our clients to consider is just use the distributions from the IRA to help pay for the premiums on that permanent life insurance policy. Yes, we know that permanent life insurance is going to cost you much more than a term life, but when you're talking about estate planning, you cannot use term insurance, which is only going to cover if something happens to you within a period of time. You're going to need to look at using permanent life insurance because that's going to cover you when something happens to you. So if you're trying to do something permanent and you're trying to solve for a permanent solution, a permanent life insurance is going to be the key element and the key tool that you're going to have to use in that particular situation. But in using those distributions from the IRA to pay for the premiums of that permanent life insurance policy, you accomplish a few things here. One, when you're using the distributions from your IRA, you're going to be reducing that IRA as well. As you're reducing that IRA, when it comes down to you then having to take money out for your required minimum distributions, that IRA perhaps will be much smaller. And therefore, the RMDs are going to be smaller. And if the RMDs are smaller, that could ultimately reduce the taxation that's owed when those RMDs are coming out. So if you are a participant or a owner of a thrift savings plan and you're trying to reduce the tax burden for a non-spouse beneficiary, the information that we've shared with you today in our Tuesday tip could really be very, very valuable. Thank you again for tuning in to our Tuesday tips. Please understand that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today. And as always, we would like to hear from you. If you are an owner of a thrift savings plan, in the comment section below, please let us know what your strategy may be for passing on the funds in your thrift savings account. And if you found this information to be beneficial, all that we ask is that you subscribe to this channel so it can continue to grow, like this video, and share with others.